keep my notes out of the camera. Hopefully I can do it. Because I don't want to look down.
Okay, we're on.
Good afternoon, everyone, and welcome to San Antonio's Startup Week, the final week. I'm Dizon, and I'm your moderator for today's panel discussion, Funding the Next Wave of Female Founders. Now, just this month, PitchBook reported that venture funding for female founders has hit its lowest quarterly total in 3 years. That means investing in women-led companies this year is on pace to be the worst since 2017. And on the investing side, while 54 women became partners in VC firms in 2019, 65% of venture firms still have 0 female partners at their tables. So how do we look ahead and how do we improve these numbers? And how do we help fund the next wave of female founders? Well, today I get to talk with 2 incredible women who are in the investing and entrepreneurship world to talk about their experiences this past year and how they think about funding female founders for the future. So let's begin, and I'm happy to go first. I'm Dizon. I'm co-founder and COO of Active Capital, and Active Capital is a pre-seed and seed investing into startups that are building SaaS technologies. We look for capital efficient founding teams that are building incredible SaaS technology tools and looking to disrupt their markets. I'm also an Alamo Angel member, which is part of the angel investing community here in San Antonio, and a co-founding member, committee member of Beam Angel Network based out of Austin, Texas. And in that group, we look solely into funding women-led startups. With me today, we have Meg Paulus, partner of Holt Ventures. Meg, welcome. Please tell us a little bit about you and your company.
Sure. Thanks for having me, Kat. So as Kat mentioned, I lead Holt Ventures, which is the strategic venture capital arm of Holt Cat. We're one of the largest Caterpillar dealers in the U.S. I also lead the investment activities for the Holt family and the Holt Family Foundation. So at Holt Ventures, we look for seed and Series A investments. We're actually a co-investor, so we don't typically lead deals. And we're looking for investments that are optimizing the way that we do business. So that's manufacturing, distribution, and service. And then other companies that are transforming our touch point with our customers. So a lot of innovation in energy and the way that we interact with construction consumers. As Kat touched on in her introduction, I'm a board member in Alamo Angels and also a member in Beam Network. So I'm super excited to be joining today, and thanks again for having me.
Sure. And we also have Ashley Rose, co-founder and CEO of Living Security. Ashley, please tell us a little bit about you and your startup.
Yeah, hi everybody. Kat, thank you so much for having me here today. As Kat mentioned, my name is Ashley Rose. I'm the CEO and founder of Living Security. We're an Austin-based cybersecurity startup. We help enterprise organizations tackle their #1 cyber risk, which is human error, through our security awareness and human risk management platform. Our company, we recently raised our Series A back in March earlier this year, and we're going on about 45 employees to date. So a lot of fast and strong growth through the pandemic during 2020.
Wonderful. So for this panel, we're hoping to give some insights, some advice, and some tips for those of you that are going out and getting ready to start your capital raise. And I guess the first step starts with making contact, connecting, and getting in front of investors. So Meg, for Holt Ventures, for your efforts, how do you find deal flow and how do founders get in front of you to pitch their ideas?
Yeah, so we are very lucky to have a strong brand presence at the parent company, Holt Cat. And so I think that first and foremost, generally the founders that are innovating in our space come to us, which has been really great and a huge source of deal flow. We also have a fund-to-fund strategy where we invest in other funds in our space so that we can see more co-investments that are relevant to us. And that really helps us get a good lay of the land and understand what other investors that we consider best in class to see what they're doing. So those are really the 2 main sources of deal flow, but The last one is problem identification within our business. So I spend a lot of times with our operators and looking at their workflows and understanding kind of what are their major pain points. And so as a result of those meetings, we do have a bit of an outbound strategy where we're looking for companies that are solving for specific pain points. And those ones have been really our best investments so far, where we're using them in the business and can provide kind of more holistic feedback to the entrepreneurs that we're working with.
Wow, so it sounds like that you do a good portion of outbound proactive seeking out investment opportunities, and I'm sure you're reactive, the intake of founders coming through is quite extensive too. For active capital, very similar. We rely on accelerator programs. We rely on our network. We get a lot of cold emails, which we do respond to, and we've actually had very good success early on. So that's something that maybe not every VC firm or investor is open to, but we've found that we never want to miss an opportunity, and that just brings just a great balance of not only proactive but reactive in the inbox. So Ashley, you have raised funds in your past. You've done it at different levels. What were your strategies in getting in front of investors and making those successful connections?
Yeah, so for me, it was really important, especially, I mean, I think you find out here in the Austin and San Antonio area that the relationships and connections early on really matter and go a long way. And so I spent a lot of time networking and then reaching out to other people that were in our community to kind of understand who they knew, who might be interested, who was actively investing in our space and our phase. One of the groups that we got involved with pretty early on was Capital Factory, the kind of ecosystem for entrepreneurship here in Austin. So there was a lot of opportunity for me to connect. And the way that I looked at it, it was, somewhat of a kind of a time trade-off. I was either going to invest upfront early on to make connections with, funds that I knew in the long term could be interested in investing, or I was going to have to do it later on when I kind of hit the fundraising path. So I chose the former. And it did expedite, quite a bit, I think, the timing of our seed and then also our Series A round earlier this year.
Gotcha. So for some of the investors that you connected with, Ashley, that said, not now, what was your strategy path? Did you keep in contact with them? What was your approach there? And did any of them actually turn into later on investors?
Yeah, absolutely. So I would always make a point to ask, okay, well, then what do you want to see? Like, what are the metrics? What are the KPIs? What is the business traction that you're looking for? And sometimes I'd get it and sometimes I wouldn't. But one thing that I did do was I kept a monthly cadence going of just updates. And I felt like if I could just say, hey, we're going to do X, Y, and Z, and then show that and prove that over time through these monthly emails. Like I said, when it came time to raise, there was already the backstory history there. A lot of the traction and proof points were already baked into the conversation. And so, your active capital, you guys came in at the end of our seed round. I met Pat very early. We had just, started launching the company. And it was one of those, hey, you're not quite ready for us. And so I said, okay, I'm going to keep you updated, keep you on our monthly update list. And then when it's time for our first, pre-seed round, active capital and Pat did come in, and then they've been an active part, through our pre-seed, our seed, and then, our Series A round earlier this year as well.
Wonderful. So keeping the conversation going, keeping investors connected. Ashley, did you go with an immediate ask for the raise, or did you feel like building the relationship first proved to be more positive for you?
Yeah, it was definitely a little bit of both, just depending on timing. So, when we obviously were fundraising, there was a lot of reach outs and networking that I was doing at that point. And so, I would come in and talk about, hey, the raise is what we're doing, let's talk about it. But when it was in between fundraisers, when I wasn't actively raising, I did come out and just, kind of ask for advice. If you can start building that relationship, talk about what you're doing, maybe some of your challenges, what your goals are. Like I said, sort of set the stage of this is what we're looking to accomplish over the next 6 months, 12 months, 18 months, whatever your timing is. and then let them watch you execute and prove that out. I mean, the execution and traction is like a story that nobody can argue with.
So investors have to make a decision, whether it's they're going to invest or they're going to pass. Meg, what needs to be part of that startup for you to feel like they should be VC backed? What are the signs that you look for in that founder and in that founding team to feel like the answer should be yes?
Yeah, sure. So I'm first going to comment on what Ashley said. I think that her approach is kind of what every investor looks for, right? Like you have to be able to pivot either way, either to be building a relationship over a long period of time, or you have to convince them upfront that that they can be ready to go. And as a co-investor and not a lead, I'm often on someone else's time frame, and so I have to be able to get comfortable with the founder really quickly. And the people that can convince you quickly are the ones that ultimately get the money. So for us, I mean, we have actually a screening criteria that I go through in each investment committee, and it is on the strategic side. So does it leverage our core competency? Is it dramatically better than the status quo? Does it solve a meaningful problem? And is it one that we'd pay to solve? And then is it feasible from a regulatory perspective? And so those things all really help me in just like kind of having a yes or no list. I would say, some things that sometimes I get approached with companies that are super capital intensive, where the founder wants to be the ultimate owner for the company's entire life cycle, where there's really no impending liquidity event. I would say you just kind of have to know your intent when you approach a venture investor, because ultimately the goal is liquidity. And then, I think if a lot of the qualification for me up front is quality, not quantity. So I don't really look at like what are your revenue projections and what are your KPIs right now, because often I get approached with things that are almost just past the idea stage. So we do look for at least an MVP so that we can test it or kind of get some customer feedback, and that's a big part of it. And then generally, the biggest question is for me is how are you going to impact this market? For us, it's a lot of it's a very different decision maker than a lot of people that would be at like a technology company in this age, and the adoption cycle is very slow. So we need to see that the founder is going to be able to persevere through slow sales cycles, and that they have experience in the market and really truly impact the ability to impact the market.
Gotcha. And to feed off that, Meg, I think similar for active capital, even more so, especially as we're getting more into the pre-seed stage where they're just getting started. A lot is thought about the founding team. Is this the right team to solve the problem? Do they work well together? Are they looking at the market right? We do a lot of pressure testing right up front to really see if they understand their market. And I think this is where founders maybe tend to get very challenged early on is, do I really feel the passion to carry this on for years and years and think through for the ups and downs? And I think that's the part where we're really watching when we're doing these initial discussions and these initial meetups is, how determined are they? How is this going to be the team? And every investor is very different. Some are very passive just through the investment. Some are very active, sitting down on a monthly or quarterly basis and doing reviews. So I think that's another thing that maybe founders need to not only think about when they're raising capital, but who they're raising capital from. And is this, the relationship you want? Ashley, you have a few investors that I'm sure are on the range of very active to maybe just, not as, in close quarters. What is your preference when you look at an investor, and do you take that into consideration how they operate post investment?
Absolutely. And I think it's about creating the right mix and also just what you need during the time that you're raising. So for me, it was great to have a little bit more, as an active investor, and then, Pat and Active Capital coming in. You guys like to be active and involved in the business. And at the early stage, we are first time, really truly first time, venture-backed founders. And so I enjoyed having, Pat come on with his operating background. He was a founder, he'd been there, done that. And so I felt like I had a trusted advisor for a lot of things that I was going through. And there was, kind of understanding of the challenges and how to work through them. We also stacked our advisory team, right? And so we want to make sure that we have people from our industry, and that people can kind of help us from, the product market fit perspective, especially in the early days, and understanding the strategy around the market. And then as we continue to grow our cap table and our investor base, you really want to offset that, right? So the more active investors with people that will kind of be more passive and will be available when you need something. Because if you have too many that want to be active, it'll just pull you in a lot of different directions, and you won't be able to spend the time in the business, building the business and execution. So finding a balance was really important to me. And I think we've done well so far. So, hopefully we can keep that strategy going as we bring on more funds as well.
Gotcha. So alongside VC funding, there are angel investors. And angel investors invest, well, it depends on the angel, right? Some invest deeply in their past knowledge of an industry. Some like to dabble in different types to diversify their portfolio. Meg, you work very closely with the two angel groups like I do. I feel because VC is more structured and focused on our investment thesis, angel investing allows for more of a broad scope of investors. How would you characterize angel investing versus VC investing, Meg?
Yeah, sure. So I think part of it is the risk profile, right? So most people join these angel networks because they want to deploy capital and because they're really excited about supporting an entrepreneurial ecosystem. And for VC, sometimes I think it's harder to get into the portfolio because they have portfolio construction goals. They're trying to have a tech size, and really, it's kind of a different person. You're talking to an individual oftentimes, and then you're talking to someone that is a professional investor, and sometimes they can be the same. So I operate, of course, as part of Alamo Angels and look for deal flow there. But ultimately, I don't make a commitment that we're going to make an investment before seeing, who they're going to bring to the table. And so generally, I think when the approach for the entrepreneur is different too. With the VC, I think a lot of times what you're going to get, the process, what they're going to request from the data room, and how how many people are going to be on a cap table. But I think when you're going to an angel network, you should be asking, what is this process like? Am I pitching? Am I meeting with people individually? Do you have a fund, or are there going to be 100 people on my cap table as a result of this round? And really what their preferences are, because I think, as a group, you have to play to each of the angel investors that join the network. And so there could be really a full gamut of different preferences that are there.
One thing that excites me, Meg, is I see a number of female founders come through the angel investing side versus, VC side. I want to see more in the VC space, taking VC dollars, but I see it happening in the angel community. I'm hoping it will move, and I think that's also coming in. It does come in waves, as they start to build, they get their first seed investment, then they build upon that, and then they're ready to close additional dollars. So I think that's what's very encouraging for me, being part of Beam and being part of Alamo, is you're starting to see more female founders come through the angel community. Boy, I really hope it starts to translate into VC backed opportunities. Now in March, everything as we knew it changed, and the world changed. Everyone had to rethink what they do as a business, their purpose, and how they refocus on how they move forward with this change. And, I know that even VCs took a very hard look at how they operate within this. And I would love to get, again, your thoughts, Meg, on, what did you see the first few months of the pandemic, and how have you seen it change the last few months of where we're at today with regard
Yeah,
to investing?
sure. So I think, first of all, whether or not my side of the table, the investor side, was saying it was impacting them, I think it certainly was. And I think certainly the bar was raised. And again, that wasn't always said. I brought two investments at the very beginning to our committee, and they both got shot down, and I was totally surprised. And so that was a good opportunity for me to kind of reset and think about what I was bringing. A lot of strategics that I was talking to actually are funded off balance sheet. And so they got almost completely shut down and told that they were not making any new bets until there was some clarity in the market. But I mean, I guess more specifically, I saw a lot of people, we've done a few supply chain visibility bets, and I had seen a lot of people pull out of those because they just had so much uncertainty about where that was going. And so my conversations have changed as well. I think we're talking a lot more about burn, like we always are, but also about runway on where people think that they need to raise. So we did a few bridge rounds, and I think a lot of people did. I haven't done a price round very recently, and so I think that's certainly a little bit of a trickle down from COVID still. And you mentioned like pressure testing as part of your initial conversations, and I hate to be a doomsday person, but I think sometimes when there's some more challenges in the market, that it really brings out like the bright spots within your portfolio of how they react to uncertainty and kind of where they pivot. One of our companies, for example, was having a really hard time getting people to even try out their product. And so they shifted their revenue model for a bit, where they did more freemium model, so that they could actually get into the hands of people that could be their consumers, without it being such a big and long-term commitment. So I think in conclusion, I said a lot, but I think I saw a lot of people trying to be more dynamic, and those that were not, I think, are seeing repercussions of that.
Absolutely. And we saw a number of portfolio companies pivot and try something new to really find a new revenue line. We did have a moment of, let's make sure the portfolio's taken care of, who needs help. But depending on where the VC was in their period, if they had just raised funding, if they were in mid-cycle, a lot of opportunities sprung up fairly early, in that because of the change, we saw different types of deals. We saw valuations that were very compelling. We saw things that actually had us operate a lot faster and accelerated a lot of things for us in being able to get into a really good deal and start supporting new founders. So it was just interesting. Also, because we're in the SaaS industry, SaaS is pretty much focused on remote tools for companies, and the ones that were having some real uptick and lift were the SaaS technologies, as we all know. So I think it also depends on the industry focus that those had. So Ashley, running a business amidst a pandemic, what came to mind? What changes did you have to make? And what was your mindset kind of going through and kind of moving your business forward during this 8-month period?
Yeah, it was a little bit of a crazy time, and definitely not what we expected. We closed our funding round, our Series A, the day after the stock market crashed. So right there, smack dab in the middle of COVID hitting America. So what we had expected was, hey, we would close our funding round, and we have growth plans, and we're gonna execute, and like, let's go. And then of course, everything just kind of paused. It's so strange. We had deals in the works, we had pipeline we had been generating, and everything froze. And so for me, it was around, how much information do I have? And in the beginning, it was very little. I had very little information, like most of us. And then, where was my level of certainty, from a risk management perspective, in terms of like, do we want to keep investing in certain areas? Are we going to pause in reaction to this? What's happening? And so what we didn't want to do is miss an opportunity because we didn't know how long that this was going to play out. And so, we obviously spent a little bit of time kind of watching the market, talking to our customers. Actually, one of the first things we did, and I'll talk a little bit about what our product line was at that point as well. The first thing we did was start getting on the phone with our clients. And I remember an advisor, they were like, "Why are the clients on the phone with you?" And I'm like, because all their workforce is moving remote, and they've been training, they've been engaging with people in person, they've had marketing opportunities through the office, and their whole life is upside down as well. And so how can we as a business support our clients? And maybe that wasn't going to be initially through, upsell and cross-sell and like new revenue, but we knew that if we could partner with them through this transition, then we were going to come out the other side better. And so, we as an organization, we froze our hiring plan, we adjusted our resources to execute on the things that were most critical, right? So we did, kind of slow growth a little bit, but we wanted to make sure we weren't missing on the opportunities. And then we did have a physical product that, completely shut off. Our clients weren't able to use it. They were doing in-person training they had a SaaS-backed platform. And so once we identified that this was going to go on longer than we had anticipated, and obviously most of our organizations are still remote, we work with the enterprise. We knew that we needed to make a quick pivot as well. And so we launched a campaign to bring everybody that had in-person training online. We'd always, we're growing and accelerating on our digital online training platform. And so we spent a lot of time focused on transition. No matter where people were, we, kind of gave them the digital software for free. We wanted to just get them using. We wanted to get them, getting that value from Living Security's product line. We converted over 85% of our in-person training clients digitally within the first 2.5 months of COVID. And then we just went through a very heavy renewal cycle, and they're renewing and they're upgrading and they're continuing to use and grow on the online solution. And so, I was glad that we didn't pause. We did pause, but I was glad that we didn't pause for too long, because I do think we would have missed out on a huge opportunity in accelerating our digital transition, which has always been a part of our plan.
So we all talk about the pause, and when I think about our pause, is we immediately locked into what we knew, who we invested in. When I think about first-time female founders that might have been in the process of raising, about to get started, there's kind of that, oh, what do you do now? And when I think back of all the connections I've made and in meeting with founders, it's always been in a social setting. And now that I think about a lot of the meetings that I have, a lot of the list is curated. I know the rooms that I'm walking into. So how are these female founders, Ashley, that are wanting to raise first time out, how do they need to look at the new landscape and make impact on their first time out? Because it is a very different landscape these days.
Yeah, I think it's about being more targeted, right? And investing in whether it's network opportunities or, it's getting on LinkedIn and figuring out, okay, I want to get an introduction to this fund. Who do I know, or who do I know that may know somebody who's connected there? Start looking through your connections. So, it's a different world where you could, kind of go downtown Austin or hit up a happy hour and, hey, X, Y, and Z is here, or they could be there. I'm going to go say hello and make an introduction. How I introduced myself to you, Kat, right? Downtown Austin during one of those female founders events. There's just less opportunity for that. And so, it's about being strategic, understanding who is your target investor, right? Are they investing in your industry? Are they investing at your stage? One of the things is you could look online, look at their portfolio, or have they invested in female founders before? If you can be really targeted and strategic about who you need to get after, and then find and network your way into that fund and conversation. I think that's the best. That's what I'm going to be doing coming up here in the next couple months. So I think that's the best way to move forward in this environment.
I seem to respond more to emails that start with a little bit about active capital or our most recent investment, because to me it feels like, oh, they took the time to read up on an investment of ours. I'm sure they went to the website to see who we invest in. Any tips, Ashley, that you would do if you were to send a cold email today to an investor? What would you open with? And Meg, what would you be more compelled to respond to? And I can only imagine your inbox is very similar to ours. But Ashley, go first. Like, what would you put into an email if you had to make that first reach?
Yeah, I mean, I always think start with some amount of like big traction or something compelling. Who are you working with, or how big is your market that you're tackling? Is there any proof points that you can deliver that just are going to stand out from the crowd? So again, back to the execution and the traction story. That's always what we put out first. But I think it's a small, even though it's a big world, it is a small world. If you could go to somebody's portfolio, right on their website, maybe you're looking and finding another organization that's either in your area, or they're in a surrounding area, or they're in your stage. You could reach out to that founder, right, and ask them, hey, how has it been working with this investor? This is a little bit about my story. What's going to stick out to them? What's going to resonate with them? Or are they even willing to make, a cold intro for you, or a slightly warmer intro for you? So I would probably start there before I sent the pure cold email.
Gotcha.
Yeah, I agree with you. I think one thing that maybe people don't know is how many emails we receive, and like how many inbound deals that we get every day. And so I think to your point, do your research. I would say I respond very well to having like a very short email with numbers in it that has actual statistics that I can kind of like helps me figure out kind of what it is, and like just set the stage of what I'm looking at. The other thing I'll say, and this is not an email, but if you do your research, for us, there's a join us button on our website, and that is like the most comprehensive way to get me information. It has like all of the upfront questions that we care about, and it goes onto my deal tracker, and so it automatically gets a look. And I have made it very clear on our website that if you go that route, that I always respond to you. Hopefully I'll have to figure out how to keep doing that after this year, I think, but that is my commitment right now. And so I think that you need to really like kind of work to the preferences of the investor. And so if there's a submission button on their website, you need to use it. If you know somebody on LinkedIn where you can get a warm intro, you should use it. But and I said this in an earlier panel too, I think like doing the name dropping that you can't back up like with an intro, if they say, oh, I know this person and they love us, but you cold emailed me, I'm like, well, why didn't you get an intro from that person then? And so I would just say keep it short and play to the preferences of the investor, wherever you can identify those.
Investor preferences, such a good topic, because again, every investor operates differently than the next. Meg, what are some good misses for you? I will tell you, I'm not great on LinkedIn, just for the sheer volume that I get. And I wish my answer were different. So LinkedIn for me is just really hard to tackle. What about you? Are there misses where you just can't seem to,
Yes.
get your arms around?
Yes. So LinkedIn is one of them for me. I'm just not very good at responding to them. And I always direct people to our website. Like when I do respond, I say, please just do the submission here, and then I'll get back to you. I've had a very few amount of these, but when people call me directly with no introduction, I am totally lost. I just like, I think I do a lot better when I'm prepared for a conversation. And so I don't think like the direct cold calling is the best. And then the last thing is again, I mentioned it before, but like, I know this person, he loves us, but really that person can't validate. I think that's kind of like a red flag for me up front. And so I would say either get an intro from the person that you're going to reference, or don't reference it. But other than that, I'm very good on email. I'm very good on our deal submissions, and I like talking to everyone. So that's my own mishap, is that I'm so bad at not taking an initial call, because I always think that there's something that I'm missing if I don't see it, if something doesn't jump out to me in the presentation first. So that certainly benefits the entrepreneur. It does not benefit my time, but that's probably a good thing for people to know, that I have a very hard time saying no to first conversations.
Gotcha. Ashley, through your fundraising experience, in many VC firms, there are actually layers. There are different folks in the VC firm that you actually have to talk to and speak with. Do you have any advice on how and when and timing, just to make sure that you feel like the conversation with the investors are progressing?
Yeah, and I think it's a balance between what I said earlier about investing time up front. And if you can invest time up front with the decision maker or one of the partners, like that's going to be the best bang for your buck. But otherwise, a lot of whether it's like cold outreach or intro calls, are going to be with, you're the analyst or the kind of junior level people within the fund. And you want to make sure that you're being cautious of the time that you're spending with those people, and make sure that they are going to be coming and talking to the partners or pitching to them, and that you're getting that follow-up. And so this kind of goes down to running that like a tight process. And so when you actually set out and you want to make sure that you are keeping everyone in the right timing and in alignment, and starting at a certain point, hey, where I'm going to get started, I'm going to take all my intro calls between X and X date. Let's kind of stack those up, make sure that we're starting the process, get your follow-up plans down, know what their next step is. If they're going to go pitch, is it going to be on Thursday or Friday? Hey, okay, great. I'm going to follow back up with you right afterwards to see what the feedback is, to see if we're going to be moving forward. It's truly running another sales process and managing another pipeline. And I think one of my learning moments and takeaways from past funding rounds is when you're doing that and you're running, different processes with different timing, there could be opportunities that you're missing out on, or funds that you're missing out on, because maybe they're not in alignment with where the rest of the conversations are. So, even though you're building relationships beforehand, you really want to make sure that you're running a tight process. Everyone's timing is aligned. You're kind of getting people to the same stage at the right time during the fundraising.
I would like to comment.
I'm so sorry. I think I'm having a. Go ahead.
That's okay. So I think, one thing from my perspective that I've noticed about some other investors is that they don't always circle back with the entrepreneurs. And, I think part of keeping the conversation going is certainly on the venture investor side as well. Like, that is just normal human behavior, to respond to people and to make sure that you are being transparent about where you are in the process. And so I think it's just an important tip to highlight for entrepreneurs, that if you're working with a partner that is not responding to you and not being transparent with you about where you are in the process, you probably want to reconsider why you're working with them, because I've seen that a lot, and I don't think that is normal to be that disrespectful, I guess.
Yeah, and Meg, I agree. I think, but on our side, it's like, it's okay to ask, right? What's the next step? When can I expect to hear back? Like, set the expectation ahead of time so that you're not left waiting. But I absolutely agree with you that you want to work with somebody that's going to value your time and value you as an entrepreneur as well.
Exactly.
I'm back. Sorry, I'm having a little instability on my network, a bit of latency. So next question. What are each personally doing to help the landscape for helping female founders get funded? What are the activities we're all involved in?
I can start. So I think from my perspective, I'm doing the only thing that I think is actually matters, which is seeking out women and trying to get them into our portfolio and trying to create a more like an inclusive environment really for them to pitch. Alongside that, Kat, we're both in these angel networks and Beam, and just specific networking groups where you're trying to support and mentor other women so that they're ready to pitch. But really, I've had such a hard time. There's not a ton of women that are entrepreneurs in the industrial landscape, and so whenever I meet one, I'm so excited. And even if we don't invest, I try to at least be a tool for them in the future past. So I think the biggest thing that really matters is seeking out other women and trying to support them.
Ashley, what about you?
Yeah, well, something I did recently, I'm involved with a female founder Facebook group. And so I posted on the group and, asked, hey, and I, of course, checked in with the VC first as well. But hey, who's in the B2B SaaS space that's looking for, seed or Series A funding? If you're interested, shoot me an email, put a little pitch in there, and I'll pass it along. And so that was like something I could open up. Obviously, the VC was open and interested in doing that as well. We'll follow up and see if anything came out of it. But I also think just sharing our story. And so, when events like this come across my desk, it could be easy to say, hey, I'm too busy, or, we're working with a customer. We obviously have a lot going on, but I do think that being involved and sharing our story and sharing learning moments is important during the path. So, trying to make time on my calendar to have these conversations, I think that's also very helpful.
Same here, Ashley. I think I don't see enough women in the SaaS industry. So I do get excited when we do get to speak to one, we do get to invest in her vision and mission. In the angel side, being part of Beam has been really rewarding. The first cycle for our cohort, we had over 100 applications, which tells me women are building and looking for funding. So that's been very rewarding. And then with regard to building community, I try to be as accessible to female founders, even if they're not in my industry. Business is business. So there's always some sort of feedback or encouragement that we can lend and offer to female founders, because it is tough out there, especially when you're the first time founder going out. And, if there is some information or some feedback that may help them see around the corner and help them have a successful first time out for raising, I think that just, it motivates me. And I feel when I'm in the presence of women that feel the same way I do, how important it is, as we've just shared with the numbers earlier in the panel discussion, that we need to keep pushing forward. And I think there's so many opportunities in different areas. And, the more that introduce themselves and present themselves, I encourage every female founder and every woman investor to get involved, because I think they just need, and it needs to be taken as urgently as possible, because we don't want anyone to lose the faith on moving forward. So as we start to come to close, what are some very tactical pieces of advice we can give female founders on how they look forward and ahead to begin their raise, their pitch, their storytelling? And I'm going to start with Ashley. What would you tell a female founder first time out, the most needed 1, 2, 3 steps to get going in the new landscape?
Yeah, so I'll reiterate one of the points I made earlier, but do your research, get targeted, get specific, find those funds, find those investors that have a track record in your industry and in your stage. Also, you get even more specific, find out, have they invested in female founders prior? We hear a lot about pattern matching, and have thoughts on the effectiveness of that or not. It happens. And so if they've seen successful investments with female founders before, then they're likely going to be open to a conversation with you as a female founder. Then, of course, practice your pitch. We've gotten storytelling assistance and messaging assistance before as we built our deck. Had it nicely designed as well. So definitely the preparation there when it comes to your pitch and your story is extremely helpful. And then know your numbers. nobody wants to be in a meeting where they're caught off guard by a question. They don't, they come across not really understanding or knowing their business. And so I spent a lot of time in preparation before important meetings, just like going through what are those numbers so I could, come off, spit them out as soon as they were asked. But yeah, I think those things helped me develop confidence. And then of course, you setting up friendly pitches as well. So we said practice your pitch. So that could mean in a mirror while you're walking around your house, right? And you're, to your spouse or your best friend. But if you can set up some of those friendly pitches, to be even to be able to get questions, right? So we can anticipate in the future, what are other VCs, what are other investors going to ask, so that you can actually anticipate and then build those into your initial story and your initial pitch, or at least have a prepared response to what that question is going to be. That will also help build confidence and have you come across as better prepared.
Wonderful.
Yeah, so I think to Ashley's point, being intentional is the first one, is just know who you're reaching out to and why, and make sure that you have an ask when you get on a call with that person. The other thing that I think is really the culmination of the things that Ashley talked about in terms of how to prepare for a meeting is to get used to being your own biggest self-advocate. I think like a lot of venture investors are looking at the other side of the table and looking for confidence, because like if you are not confident in yourself to manage that, the millions of dollars that you're going to raise, then it's a little bit difficult to give money and feel confident. And so I think that a lot of women are just not as comfortable as their counterparts in being such a big self-advocate, and that shows in pitches. And so that would be the biggest thing, is I think practice enough where you feel confident walking into a room, and get comfortable with the uncomfortable level of self-advocacy that's necessary.
Great. And I guess my takeaway tips would be very similar to both Meg and Ashley, but I actually want to go one click deeper. When we say know your numbers, that is end to end, what your revenue is. If you're in SaaS, what your MRR is, what your burn is, how much are you, what are expenses totaling out to? If you had to make some changes, what would you adjust? How do you think about building out your team in the next 6 months with funding? And where is that going to take you from a revenue perspective? That's very clear cut, and what most investors want to hear when we say know your numbers. If it's a different industry, there are different metrics, but get to know familiarity with your industry, and what are those key KPIs that most investors take a look at, deep dive, and be able to walk end to end on explanation. To me, that is where you actually get your confidence going into those meetings, is you're ready to handle any one of those questions. And also, again, as it's been stated, do your research and make sure not only are you not spending and exerting so much of the investor's time, don't exert so much of yours if it's just not a match. And there is such a great starting initial conversation when it's already shaping up to be a better match, to where the conversation gets very meaningful right off the bat, because you did the research, they've done the research, we understand the numbers we're talking about, and it makes the feeling of, hey, this is a good partnership right off the bat. So I think there's a lot of things that female founders can take away from today's discussion as far as what to look for, but can't say it enough. That confidence going in and presenting your story, your vision, has to sell it and command that room when you do. And I think that's where you stand out above the rest, just because there's so many founders out there looking for capital, and you have to set yourself apart. And I think with these takeaways, that's how you bring it home and do that. So, well, ladies, thank you so much for the time today. This has been a great panel discussion. So happy to have you with San Antonio Startup Week, and closing it out in a big way. So thank you so much for your participation. And if you're a female founder looking to raise capital, hopefully this session has really helped you kind of put together your plan of action to go out there and start your raise.
Thank you, Kat.
Thank you.